Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Welcome back to the podcast. This week, our guest is Clarke, who is a private wealth advisor for Halpern Financial. Welcome, Aaron.
Hey, Gary. Thanks so much for having me on. I really appreciate it, and for you taking the time out to build this podcast for those who are out there, maybe just need a little information. So thanks.
Great. Thank you. So, Aaron, tell us, how did you get into the financial planning, wealth management arena?
Yeah, I probably have what is a newer path into the industry. I'm a certified financial planner is kind of my main credential. My background is actually that I started off trying to be an engineer. I was at Virginia Tech, kind of fumbled my way into the financial planning program where I was able to kind of balance the numbers, the application with the people and the personal side of planning. And so for me, that's sort of how I found my way into the industry. The side for me that was where the passion came from was actually just a family experience I had. My father's set of parents and my grandparents ended up in a Ponzi scheme, ended up bankrupt. So, that drives the passion side of it and why I do it the way I do it in business, right? Feeonly independent. So that is sort of how I cut my teeth. And then career steps, Financial Planning Association, just networking in there, meeting really good people, trying to align myself with people where I could learn really consistently coming out of school. And 8 years later, here we are. So it's been a good path.
Right.
Yeah.
So, you had the experience with your grandparents and not getting so great advice. And that's kind of what you got going, what got you going into this field. But what is it now that gets Aaron fired up in the morning to come in the office to work and to help people?
Yeah, it's actually great that you asked that. I think this is kind of the fine line of where, for me, I say this is really the duty of the financial advisor, where we're actually creating the motivation for somebody to make the change. A lot of times the way our team works, right, we are building this elaborate analysis, we're building a lot of plan, different actions that we need to take over time. But the piece that I think, most advisors need to make sure they're focused on is actually getting the client to understand why. That's helping them feel fulfilled with the way that they're using their money, and then actually explain the importance of it to the point where the client is going to take an action, right? And this is like, strategy, right? If it applies to investment strategy, or if it applies to not changing the investment strategy, right? Whatever it might be. But it's really, I love getting people across that finish line where they take an action that really improves their financial situation.
So when you're meeting with these people, what are some of the common mistakes that they're making?
Yeah. So more recently, I think the thing that I'm seeing is sort of like that recency bias, right? And like behavioral psychology. The market has been, if you look like 2016, 17, right on, it's been, relatively easy to make money, right? And so in a way, investment management has sort of become kind of like table stakes of financial planning, firms, right? Everybody's doing something similar, if it's passive or long-term, at least in like the fee-only independent realm, that's a lot of what's going on. And, I think what people are not asking is they actually aren't asking, like, what is the business model, right? How are you doing the investment management on the business model level? And I see people mix up fee-only and fee-based really frequently. It's a small detail right in there, kind of how those two might be better for one client versus another. But I think people don't understand the business model side of it. And I think that's, it's become more prominent, right? Like, okay, I'm talking to my advisor. I think more people are jumping on that train, which is a great trend. I think the question is, do they really understand the differences in the way that advisors are running the business out there?
So, you bring up, fee-based versus fee-only. So can you explain, what the differences are? Because most people do think that that's one and the same.
Yeah, absolutely. So I like to kind of frame this explanation like with how the industry developed over time. So I'm going to add one on. So we have fee-only, fee-based, but also like the wirehouse model, which is sort of how investment advice started. And so originally you look back like 80s, 90s, right? Wirehouse model was like really the predominant model. There wasn't a ton of fee-based or almost any fee-only planners at that point. And that model was great, right? There some corporation was making a product. They had people who were helping get that out to the public, and that was just the chain of command. That's how the industry started. And over time, that rotated into fee-based, where you kind of added more of that fiduciary responsibility in. You were able to sell products that were being made by the parent company, but you could also have your independent side where you're managing outside of that. So that's kind of how I like to describe fee-based, is you sort of have the blend, access to more things, but still, I think some clients worry about the conflict of interest that may come there sometimes. And then you have the fee-only model where, I like to sort of show the model being inverted, right? Like the client comes in and hires the whole firm, and then now we're going out to the public, what companies are bidding the right price and doing the right things for you, right? And so we're kind of inverting the business model, fee-only being, independent fiduciaries, really just hired directly by the client, and the whole team, working for the client. So that's how I like to explain it. Hopefully that made sense.
Yeah. So, I mean, obviously, the clients are coming into you. I mean, at this point, I don't want to say we've totally come out of the pandemic, but it kind of seems like, we've made the turn on it. Now we're dealing with what's going on over in Ukraine and, with Russia and gas prices and everything else, inflation and so forth. Kind of what are you telling your clients right now when it comes to all of this uncertainty?
Yeah, I think the biggest thing for us, our team, right, because we're so intentional on the actual financial planning side, most of our conversations are, hey, well, we plan for these types of events to occur, right? When we're using things like Monte Carlo analysis, right, and kind of, running enough sequences and iterations of different outcomes to say, okay, this is one of those potential variations, to where it makes it feel more comfortable. So that the conversation becomes more about, well, we've actually already planned for this, so now not do we need to react, can we be proactively taking an opportunity here for you somehow? If it's a Roth conversion, or if it's, taking advantage of tax loss harvesting inside the portfolio, can we rebalance? Should we be rebalancing because you're close to retirement? Is now a good time to do that? But I think, one of the big things, when people worry, right? When clients worry, they'll call. And so the question kind of becomes, should we be doing anything? And the answer is, when you have a team in place, right, we're already doing it all the time. And so, we're reviewing to see should anything be cut from the portfolio or not. And most of the time, no, right? Because we don't want to be changing the investment strategy, from month to month or every quarter, right? When we set the strategy to work over a 7 or a 10-year period, right? We have to, kind of let that play out. And so a lot of times it's, hey, we already planned for this. And remember, when we made that 10-year plan, we want to be taking advantage of movements like this, right? So we're trying to train that behavior to be, everybody is worried. Maybe this means opportunity for me because I'm not in retirement yet. Or if I am in retirement, just knowing, hey, the team has already carved out what I need for the next 12 to 18 months, right? There's ways to kind of balance that. So those are a lot of the conversations we're having right now, and then obviously the walk off the ledge, right? I want to go to all cash. Yeah, I got to go to all cash. Why this time? Why not 3 years ago? Or, remember 6 years ago when you thought that and we didn't, and it worked out, right? It's okay, and having that conversation of, stay the course, right? More frequently lately. Yeah.
Yeah. I think it's always important, for people to understand, like you said, look, we put together a plan and we put it together for a reason. And, let's stay with this plan because you liked it before. Just because things are a little bit chaotic right now doesn't mean that you deviate from that plan. And I think that's even more reason to stay with the plan because of the chaos. Because I think most people, when there is chaos, that's when they make mistakes.
Yeah, of course, right. And we all, I think most people have heard, the emotional roller coaster of investing cycle, right? We always are at the top, we're so excited, and then at the bottom we're beating ourselves up, and ironically, right, we're doing it backward all the time. And that's just emotions, right? They overtake our decision making capability, and so knowing that, right, we want to reframe, the financial planning idea into, well, we plan for this to occur, right? So what's the opportunity for me at this point, right? Can I take advantage of this instead of having to fall back and worry, from the fear mindset?
Right.
We try and train to that. Yeah.
Yeah, I think that's one of the good things with both of our jobs, that lots of times we try to tell our clients, it's like, look, let us remove the emotion from it, because we're not going to emotionally react to what's going on.
Yeah.
It helps. Granted, it's still kind of hard to convince them sometimes when it's their money, but we still try.
Yeah.
What are some of the big challenges that you see, or that you're having now, or you see coming up here in the near future, and how are you planning to overcome those obstacles?
Sure. How do you mean, in the market, or with planning?
Yeah, just in the market, or just you getting clients, because a year ago during the pandemic, it was everybody was on Zoom, people weren't meeting in person, and to me, it's hard to ask somebody to trust me with whatever the savings that they have in retirement when they've never met me in person and shook my hand and things like that. So
yeah, great question. So I'll approach from twofold. I think in the investment world, right, like what's going on in the market, I think Ukraine is on everybody's mind in terms, the Russia and Ukraine conflict. I think that's on everybody's mind. But I think, the rising rates, I think, is probably more directly impactful to our economy that we live in, and kind of how we operate day to day. So, from our side, we've been managing that risk for like the last 8 to 12 months. Really, like as soon as we started to see kind of inflation kick in, we started kind of adjusting just the fixed income piece of the investment strategy. And then on the sort of the business management side, practice management side, I think one of the biggest challenges is actually exactly what you pointed out, right? If you're not seeing somebody face to face and getting that rapport, Zoom can get you maybe 75 or 80% of the way there, but there's just something about being in person, right? Where, when you're making a big decision like this, you kind of want to feel somebody out and see, how that relationship might look and feel once this ends, and we're moving forward, if you want that experience. And so, yeah, I think we've done a really good job, fortunately, of having Zoom in place before the pandemic started. We were kind of already using it to present our plans and sort of drive the conversation. And so, we've adapted that, and I think that's going to stay, right? I mean, I don't think it's going anywhere, because some people prefer it, and
right.
Some of our clients might not be local, but yeah, I think in terms of driving the business challenge, I think it's just the appropriate way to say it. I think it's focusing on the people where your message resonates, right? So I mean that from the angle more of like how somebody learns more than anything else, right? So there's like 3 types of learning, auditory, visual, or kinesthetic, where like you're tactile. If you're a tactile person, you got to be in the office, right? So if you're the person who needs to take notes and be in there and see it up on the whiteboard while we're explaining it, that's what you need. And so we need to just make that available to that person, right? If we know somebody is fine with a phone call, great. If they're more social, great. But I think one of the things we're looking at is trying to give our prospective clients, if they're coming in, or our current clients, the medium to learn and be educated during our conversations in the way that they learn, and that's been really nice. So hopefully that'll continue to lead more referrals in through that process, because hopefully we're raising the level of education that we're providing our clients. That's really
right.
cool.
Right.
Yeah.
I mean, we've definitely found that because again, we were an early adopter of Zoom even before the pandemic hit. But now that more and people are using it, we are finding that our clients like it better when we're reviewing tax returns or doing things with them, because now they don't have to take a half a day off of work to come in or take up their evening or anything like that. They're during their lunch break, they can get on with us. We can go through it, get done, boom, and they're not investing as much time that they had to in the past. So it definitely has made a difference for us.
Yeah, and I think we it almost like allows us, right, as professionals to kind of like drive the conversation a little bit more fluid, because in person sometimes we can get on tangents, right, and like because you're being sociable and everybody's getting along, and then you get to the Zoom and all of a sudden we have the power to kind of bring it back up on screen and recenter it, and so I'm finding I don't know, maybe you are too, but my meetings have become more efficient. Not because they're providing less service. I think the service actually it goes up. Actually,
right.
Yeah, me too. Yeah, it's been really really good, and so I'm glad to hear we're not alone. The Zoom seems to be around for a while. That's
right.
good. Yeah.
So you've been doing this for a couple of years now. What do you know now you wish you knew when you first started out doing this?
I think probably just it's ironic because saying this out loud might be the thing that would have shot me in the foot, right? But I think understanding the timeline that it takes to really start to become an expert in one area of the field, right? You shared with me that you do, tax planning, right, as like a predominant one of your services, right? And that being separate than tax preparation, where we're actually filing taxes. Those are very specific, right? And I think, when I started off in the industry, my angle was try and learn something every day, and eventually you'll do all right, right? Like that's basically where I started. And I wish I would have kind of known, okay, it's probably going to take like 7 to 10 years to really kind of get in the saddle, right? And really know where you want to be and be focused on and what your topics are. And so, I think had I known this is the exact topic you want to work on, which, like some of my favorite things is things like the estate plan, like, family LLCs or limited partnerships, and like gifting outside the estate and how the tax plays in, right? And then, back to that, explaining to the client how if they give this, $5 million gift to themselves, basically outside their estate, they might save $40 million in taxes.
Right.
I love fun, creative things like that where, it's really kind of flexing the brain and all the different levers. So I wish I would have known, starting out, that's the great fit for me, because then I could have just started there, right? And I wouldn't have had to learn everything along the way. But I think that's what put me where I am. So I'm glad it went down that way for sure.
Yeah, that's great. That's great. I know that you have started up your own company where you're providing a financial planning platform for those that are underprivileged. Do you want to explain a little bit about that?
Yeah, so similar concept kind of to what you're doing with the podcast. It's just about sharing information. It's nothing grandiose, right? I mean, it's basically like a blog service where I'm just trying to answer questions from the angle of, how professionals would answer them. And so, I've got some people who are, through Financial Planning Association, who are helping me write, some of these content pieces, and they're things that are, people are looking for out there. And so it's just kind of a sort of like a pro bono effort at this point. I mean, it's structured as a business, but it's really just about trying to give back. With Financial Planning Association, one of the pieces is pro bono. And so, there's no revenue from the business. There's no anything, right? It's just trying to make it into a forum for sharing the information for small business owners who may not really have access to some simple questions, right? Kind of like you pointed out earlier, where maybe they're just scared to ask, or they think they might get billed, or, they'd rather just go to Google. And so, those answers aren't always out there, or if they are, they're not complete, I think is the best way maybe to say that, because it's not all the way thought through. It's a little too surface level. And so just, trying to share a little extra value and, maybe help somebody prevent one of the big mistakes one day. That's kind of the whole concept. So small effort at this point, but I enjoy it. It's just kind of keeping me busy on the side. Yeah.
Good.
Yeah.
All right. So we kind of covered a bunch of things so far. What have I not asked you that you wish I had?
I think the best question to ask a financial planner is, who's your financial planner? That's like one of the best ones, because I think most planners never actually ask for a lot of advice from other people. It's kind of like the mechanic's car, right? It's like the last one to get worked on type of thing. Yeah, I mean, I love the team here. Anytime I have questions about stuff, I'll run it by them. Hey, this is what I'm thinking about X, Y, and Z. What do you guys think? If you were in our shoes, would you position it differently? How should we structure this? All those questions, just being able to bounce them around. Our team's great because everybody has a real niche that they focus on. If it's investments, it's investments. If it's insurance, estate planning, etc. Right? So, we don't, and I guess I should preface that with, we don't sell insurance products, but we'll review it for clients type of thing. But anyway, I digress there. Yeah, so it's, just having that team in place to be able to lean on, I think is probably one of the key things. And so, then maybe the second question would be, if there's one piece of advice every person should have, what is it? That would be ask for help. It's okay. It's okay. It's okay to actually need to say, I don't know what I'm doing, or, I blew up my tax return. I should probably have somebody help me out. And I think, for whatever reason, when it comes to money, right, that emotional side of the brain's kicking in, and people think, it's embarrassing, or I don't have enough, or whatever it might be, and frankly, I think all of those are bad reasons to not ask for help. You should ask for help if you feel confused. And, you get a lot farther.
I always feel that, and I try to tell everybody, it's like, build your financial team that you feel comfortable with asking those questions, because again, that's why you have these people, because they're experts in their areas. Just like, depending on what, for you, it's, the wealth management side of things. For me, it's taxes. But if I'm an engineer, I think I understand a lot of things and know a lot of things, but I'm not going to know the tax code like Gary does, or I'm not going to be able to build wealth like Aaron can, type thing. So I think it's important to make sure that you really do ask the questions, and really do have your team of people to rely on, and let them talk. That's the biggest thing I see. Lots of times people making the mistakes is they don't have, their financial advisor isn't talking to their CPA, and vice versa. And to me, that's important, because if you have gains during the year and your CPA doesn't know about it, how can they help you with any tax planning side of things, or making sure you have enough taxes paid in? Especially this past year, we had a ton of people that have come into us, and they got a bunch in capital gains, and they're paying a lot in taxes this year, that if they would have actually communicated with us during the year, even though we're constantly telling people, give us a call, let us know what's going on,
right?
Type thing, we may be able to help them, if not anything, help them figure out, hey, this is how much in taxes you're going to owe if you don't make any changes.
Yeah, it's a lot nicer to have that notice in November than it is, 2 weeks before the payment due, right? Yeah, no, it's so true. And, a ton of people seem to have that issue over the last year in 2021. Just huge gains across the board seem to be kicked out. I guess, it makes sense, right? You have the dip in March, people buy, goes up, and then 2021, okay, time to pay the tax again. So, that makes sense. Yeah.
And I think some of it too is from the advisor standpoint. You guys are looking, hey, I want to harvest some of these gains and lock in, because knowing that something is going to happen with the market here coming up soon, type thing. So definitely.
Yeah. And I love what you said, back to that idea of the collaboration, right? I mean, we're putting together tax packages for our clients, just to, here's the one file, send it to your CPA, right? And, should we be doing anything with the Roth? And we're doing that in October, right? So we have time,
right.
Those things work when all of the advisory team can work together, tax planner like yourself, the estate planner, a team like ours. So I love that. Definitely couldn't second that more. That's the dream, right? The clients say, yes, you guys are brilliant. You go for it, and then just keep us updated.
Right. Exactly. Exactly. I think that's important.
Yeah.
So, Aaron, if people like what they hear and they want to reach out to you, talk to you, get some more advice, how can they get to you?
Yeah, sure. So one of two ways is typically best. The first and the easiest is just to call our office. Our number is 240-268-1000. They can just call that number. Or of course, if you want to read more about what we do and kind of how we work and why we do it that way, our website, which is just www.halpernfinancial.com. You can find everything there, and you can even schedule a call, right through the website there. So we do free discovery calls. You guys, can come ask questions of us, kind of pick our brain. Our big thing is just making sure people find the fit. So if we're not the right fit, we want to make sure they get to the right fit. If they need tax planning, right, maybe it's over to you, Gary. If it's somebody who wants, like a fee for service type of model instead of like investment management and everything else, right? Maybe we'll send them to like XY Planning Network or something, So we just want people to get to the right place. So we try and, best foot forward. Everybody can come in, and if we're a good fit, we'll tell you. If not, we'll tell you. Like it's okay, So thanks for asking. Yeah.
Sure. So I appreciate your time today. Appreciate everything that you've said, and hope to have you back again soon.
Yeah, absolutely. It's been a real pleasure, and thanks again for doing this, and the compliments of having me on. I really appreciate that. So
thank you.
Thanks, Gary.
So welcome back for next week. And this week our guest was Clarke, who's a private wealth investor with Halpern Financial. Thank you.
This show has been produced by Market Domination, LLC. To discover how you can have your own show completely done for you and turn it into a real published book and become the authority in your marketplace, go to www.marketdominationllc.com/podcast offer.